All right. So we should be back on here now and see the requests coming in. What we're looking at right here is the 15-minute chart live Apple coming off that short setup. Still a ways to go to that target. In fact, I should put the target lines down here so that you can see them. There we go. It was an interesting case because we had some expressed weakness to start out with Apple on this 15-minute when the red dot short came in, but such strong momentum going into it at gosh, if I put the shakeout that up to you, let me add it, why not? We're all adults here, we can handle a little bit more information than just, buy or sell. So you can see we came up to, and we talked about this last week, that danger zone as you get near changing trend. And it was very positive from the onset of this setup. Even when the red dot short, I was reluctant when I saw that come in. Unfortunately, with the dot alerts, I can't show that because there's no way to give you, expanded ratio histogram. That is a thought, though. I think I can actually give an alert that would tell you whether or not the yellow is below the orange when a short signal comes in. That actually could be helpful. So, just sitting here talking about this with you guys, we're developing new ways to improve, when to get into a signal from a dot alert. Obviously, I think the best course is, and hopefully everyone can hear me. Let me make sure that didn't change any of the mixer readings. Please let me know if you can hear what I'm saying. Make sure I'm not just going on. I'll put that on there so that make sure that everybody's got a signal as we do that, and I'll wait before I continue to get a response from somebody that you can hear me. Okay, good. So, like I was saying, what I can probably do is that would be an extended alert where we would notify, because the higher probability is having the lower below, and then typically in this particular case too, usually it's anywhere from 2 to 4 bars before you end up with your clean short signal off that setup. So I keep cutting out, or your processor's not able to handle it. But I'm getting that same thing. You know what, let me go back to that old microphone. Oh, that was not good. I dropped my iPhone. Alright, let's plug in that device. Disconnect this. It's way too high, isn't it? Okay, how about that from a modulation standpoint? Did it reduce it? Quit dropping my phone. Okay. Make sure everyone can hear. But the typing. I think that should modify it a bit without getting too far into the red zone here. Come on, somebody, give me a response. Okay, good, thank you. Alrighty, so what we're looking at here was the Apple, and we were just speaking about the would be convenient in a short signal to know whether or not your orange line is below the yellow, just from an advanced study standpoint, because in seeing this I was expecting a little bit more of a move up before the short would take effect, in which case I wanted it to pass before, and then I was trailing my short setup from underneath as price was rising, with the expectation that we would have a little bit more carry through because you had the orange below. And again, what we look for in just the opposite setup is if the yellow is below, then we would be expecting an immediate fall off. Gotta drink a lot of fluids. My throat seems to be a little hoarse today. Alright, so this happens to be a 15-minute of Apple. Let's look at the 78-minute while we're here. I'm going to broaden the screen a little bit so I have more real estate. That will require me to shrink this a bit. Alright. That'll give us a lot more on there. We can get rid of this text. So what I did is made some adjustments to the overall program for the dots for a visual standpoint. Not completely done with the overall setup yet. The idea was that it would put up dot, give you a stop. The actual amount also gives you the upside target, so there's no more having to calculate. You'd be able to see it directly. And for those who have the indicators, it will give them the ability to turn it on or off if you don't want it, if it's too, cluttering for the chart. The other one I'm working with actually draws a line for 5 bars so that you know where you're at within that 5-bar period. And here we can see from the Apple 78-minute catfish long. Alright. So, not surprising. It was interesting because, we could see that from our daily Apple, if I bring it back on here, we weren't too thrilled with the setup. I mean, I was liking it for a long if we could get a little bit of a turnaround. Unfortunately, the Power Mo on Friday showed that we might see some additional weakness through the setup, and I wanted to get where, and how many of you listened to me talk about I was hoping that we could achieve this dip in price and correspond to a dip to this negative 45 on the extreme histogram. We're at negative 44.82. It says differential down there. That becomes key because that becomes the beginning of your potential bullish setup. It's one of those where shorts get fooled into adding into the setup because they see price, fading. Unfortunately, they don't realize that there's dramatic buying inside of that. Just a text from my wife. She's out and about. 1 second. Okay, we're going to keep this broadcast a little bit shorter. It just makes it easier so that I can get them back up on YouTube. I didn't realize how long we went the other day. We were having a good discussion though, so it's one of those where you get lost in some of the details, and there's just so much information to go over as it pertains to the indicators and understanding them, the nuances, and the more time you have with them, the clearer I think it becomes for everybody. It's just hard to convince people that there's a different way, and this was part of the discussion that I had just the other evening. I think it was with Revenue and a few others where I was talking about my view that the market was expressing some weakness for the beginning of this week, and they're like, what are you talking about? I mean, everybody on StockTwits has been hyper bullish, and I understand they have been, and that's why it's always difficult when you're contrarian, but it's contrarian not just to be contrarian, but contrarian with statistical support. As we could see, that shorts had been building up over the last couple of days within the setup lightly, hadn't really overdone it, and so we were just expecting a modest pullback within what we were seeing from the extreme histogram, getting to an overbought, particularly if I put up, I don't know if we see it on the ES Daily, as much as we see it on, let me minimize this first. I have an ES Daily somewhere around here. It's my 5,000 tick. Nice buy signal there, red trend, look for a discount. Here's my ES Daily, okay. See if I can expand it. The easiest way to do so would be, first we can talk about, same setup here, yellow being below the orange, expected to resolve to the downside. Okay, so that's the first easy one that we had right there. Reaching the transition point, going from the zero line to a positive, usually expect a little bit of softness within that. Get rid of that one, and then we get down into the specifics here. Our up-down power last couple of days from the ES shows clearly that we had yellow above the cyan. And this is something we were talking about on MA and some of the others that had given short signals, but it's like I was saying, we didn't quite have the rollover yet. You still had that enthusiasm because they were switching from red trend to green trend. We typically understand that that can last between 3 to 5 days, and you respect that. So we were looking for, in the case of MA, okay, fine, if we get a increase in price, we can go ahead and put our short setup in there for a portion of a discount because it was still in green trend, and I think that was about $3. We were looking for 513. I have an MA. We'll put it up in a second. But then, given this, we weren't looking for horrible. Now it was the INX though that was actually um, showing a much clearer short setup within this. And if I can just convert this one. Why not? We'll just go to format the symbol, and we click $INX. Why the INX? It's just the cash index. We don't really care about gaps and things like that. So here you can see still positive building. This is part of the divergence that I've been talking about between what I was getting from futures as well as the overall market. And it started from that liquidity drop that began last week when we got all these buy signals before the fiscal cliff deal, and then boom, it exploded after the fiscal cliff, gave additional buy signals after that. But then immediately after that, now we knew with the red dot short, while we had positive extremes here, we ended up this one with a higher close and moving into negative. So we expected at least the low here at 55 to be retraced. Have we gotten down that way yet? No, we're still at 57, so we still have more room to go down to retrace this one. Now that's not even still getting to the full target, which that has 1439. So that's about that 20 plus point that I had mentioned a few days back as being the overall target. Nothing critical, and it began to show itself right here when we began to look at our up-down power. We looked at the relationship between bulls, which are the white color, and the bears, which are red. And when that gets up into the mid to high 60s, you start to be thinking, okay, shorts have really added in. Are they going to be able to push it over the top? And they need to get over that 70% threshold to really begin to drive things. But you can also have a decline in your buyers. And what I was pointing out is, and this is always a tough concept because people don't want to accept that there are specific times where institutionals like to buy, and by institutions I'm referring to a lot of your mutual funds, and that they typically pick somewhere between the 4th and the 6th, depends on if it falls on a weekend or not, to use their inflows to start buying in that, and that's where you tend to get these nice big days that have these big continuation runs, and people will claim it's off news, whatever, that's fine, but we can see some of the setups develop within our indicators. So that's always a interesting one to be able to point out to people, and then couple it with the fact that on the futures we were seeing that there were more shorts in the overall setup. You have to pay attention to those things, plus the positive extremes. In fact, from the INX standpoint, with this positive extreme down here, your full target down there at the 1426, a little bit tougher to call for that one immediately, because here's why. When you switch from red trend to green trend, you want to count those 5 days. Usually it's the second positive extreme you expect the low to retrace to as a definite. It becomes a bonus when you're looking at this one, and that's where usually then you have to start looking at your additional indicators to see if you have a breakdown that goes beyond it, and this is where we can move on to the expanded ratio histogram, would tell us whether or not we're going to get that larger breakdown. And let's put the expanded ratio histogram back on here, and there we have it. And so with the yellow being below, just like back here, we expected, the full retrace to that setup. Now, I expect that it's likely that when we do get to that, we'll end up with an additional buy signal. But until that actually happens, we're not going to pre-anticipate that the setup is taking place. You just have to go with what is. And sometimes that's hard for people because they think, oh, well, you got a short signal, therefore it has to go to that. Well, this market is dynamic. It can change on any given day, which is why I do a nightly review for members of Trade the MBI, because things can change within a day. So, back to our Apple Daily. If we did not see this negative setup from a daily standpoint when it came to the option setup for this week, I would have been all over buy them. I still felt it was a bullish setup. In general, we just wanted to see Apple move down to this negative 45 here, which would allow for a positive move up. Now, intraday, well, intraday it was on fire. Let's go to our 78-minute Apple first. Now, still coming off, moved back over here. Just didn't have any oomph to it. Couldn't get back up to that one. So that was an unfortunate one from a 78-minute standpoint. Did just get a buy setup here. I haven't converted this up dot with the stop setup and the numbers. Haven't put that together yet. So when I do, these will also show the down and up target as well. But red trend 78-minute. You're looking at a $7 range right there. So you're going to be looking for at least $2+ discount before entering that long setup. So that's important. So somewhere down in that 521, you start getting interested. From our intraday standpoint, 15-minute right here. Like we were talking about here, this is something that I may even be able to add, like I said, to an alert setup where it would be an additional alert that would let you know whether or not the expanded ratio histogram is showing positive. In this particular case, with the orange below, we expected a little bit more up movement. You would not have known that because you would have just gotten a 15-minute red dot short. So, in this case, ended up with a gray dot, which helped, and still has a ways to go. 519 is that overall setup. So, which would be fine from that 78-minute standpoint. That would be within alignment. Let's take a look at some others while we've got the charts rolling. Gray dot does mean retrace the low. Let me put that one back up there. So typically the gray dot means at a minimum, but when you're already at the low, where are you going to go from there? Well, this is where you then break out your ATR and look for your ATR projection to the low side on there. And from this standpoint, I can just go over my trust indicators, click average true range, it pops up, and for me it becomes easy because I can look at it right there and just say 364. Okay, so I don't even have to multiply. I can just say, okay, fine, I'm looking for somewhere around 350 lower. And this is what I had a question about that because so I would have loved to be able to give you an exact value, but TradeStation, in the way the alerts are set up, just gives the close price and then lets you state a message, as to what your alert is. So that's the reason we have to do the math ourselves, because there's no way for me to put in a variable that would give us a target. So, and it is what it is, barring not being able to actually have the indicators in front of you, is the best solution we could come up with. And I still think it's effective overall. Fine, it takes a little bit of, adding and subtracting, but, is that really that much to ask when you're talking about having some pretty significant signals? I mean, it does give some pretty good setups overall. And in a lot of cases, it flips at times people would not otherwise be looking for a move to change. So I think it's solid from that standpoint. Let's start up at the top here, though. PCLN, beautiful signals so far this morning. We started. Now you wouldn't have gotten this one, the halibut, because I don't have that as a feature, but certainly green dot right here came in open. We had a beautiful range of just under $5.50 there, so $2 discount would have been very easy to achieve as price came back down here, and you probably could have trailed it for even better. Hits the target beautifully. You get red dot short and comes down and just a nice swoosh. And usually that happens right at the time when people think, oh, the market can't go down. We got this little tiny retrace. Everyone wants to buy in, and boom. No, I think, while that chart on the daily for Apple looked bearish, the question is about having the weekly options. No, I would not be getting rid of my weekly options at this point, because at this particular pivot point, you could see a $10 to $15 move um, to the upside in a heartbeat. This becomes extraordinarily bullish, particularly if we can get just a little bit further below it and you close to the upside. I'll be jumping on them hard. So, just to point that one out. Is it difficult when you have a little bit of downside market pressure? Yeah, but I'm not too concerned. Apple doesn't really respond to that, and I really didn't see the overall downside pressure of Apple's being all that dramatic. Oh, we're going to get to the 78-minute PCLN. Don't rush it. Yeah, that's what my little girls say, when things get going. Don't rush it, Dad. You got to wait for it. All right, so we're looking at the 15-minute. Gives a buy signal here. And so we would flip that color just to be consistent right there. There's your up target, 652. But you definitely want to be buying discount on this setup. So let's look at that discount. We're looking at a little over $3, so at least a buck, so 648 range on the downside. I already got down there, didn't I? Not quite. A little more to go. But at this particular point, when you get down to that, if you want to be conservative because you're worried about additional downside market pressure, you put your buy stop up at this particular level at the close, and you can wait for it to come up, or you can wait for additional bars to close lower. These are some of the practical elements you can employ to not necessarily just jump in. It's always the biggest difficulty I have in trying to get people to slow down a little bit, be cautious. No need to just jump the shark. You want to see things in the right alignment. So let's just take a look real quick at some additional indicators. Let's look at our power momentum, see if we have upside pressure building, and we do. All right, nice dip, extreme lows, positive buildup right there. So they're adding into this decline. That's what you want to see. Go to our shakeout. Shakeout's still declining, not below the blue yet, -8 from -6, so very conservative. Yeah, that's tepid selling at best. Now we go to PCLN 78-minute chart. Look at that. I mean, still a little bit of patience and we made it. Alright, so this was part of the weekend review, and I left this one just like it was. 654.20 was the upside target. What was the high today? 655. Oh my goodness, how scary is that? Gray dot comes in, so that looks for a low retrace down to 644.37. I would be guarded with that. I mean, this is where, you've gotten enough movement that, putting your stop in at 652, is it prudent, you think? But let's take a look at some additional indicators on that now. Again, gray dot came in, and yellow is below. So, unfortunately, you don't have that dip in the orange below the red line, or even down below the green here, which would give you an additional confidence that the low side is likely to retrace stronger. So that's why I say put the stop in, because you didn't get the same kind of convergence you got over here when you had a red dot short. We had everything in alignment. We were still below the yellow line, not quite below the white, but that's okay. I mean, it was enough to give us an indication that we were likely to see a decent retrace on it, and we caught that. So, again, this is why I talk about 78-minute charts being a couple of days swing. Was no problem taking this swing to the upside. The fact that it hits the target exactly, and how many days in a row do we have to go over that we begin to see these fractal guys sell at the targets. I mean, it happens too often to be just coincidence. Of course, that's a tough road to hoe for me, because a lot of people just don't recognize the validity of understanding algorithms and the way that the algorithm computers trade. And that's a hurdle I have to overcome for people, and I try to point it out, and that's what it is. It's all about an education. It's a different approach. It's not always going to, you know, be met with agreement, and that's okay. Um, a lot of things. I don't even, it kind of begs the question because I always wonder how, like, Larry Williams and some of these others who've developed indicators, you know, at what point did it take before they were, taken either seriously or proven? Um, it's interesting. So let's look at some other dailies. I had shown way back. It's funny because now everyone's like, "Oh, Facebook's so wonderful." About It's like, okay, we had a series of buys going through all these setups. A little bit of dip was very positive on this particular setup, and could only scream so loud to people to buy the setups, and boom, we hit these targets. Left the last target set up right there. It was 29.21. Still rising, positive extreme, but here's your problem. Okay, and this is where the super enthusiasts are not going to recognize it. All right, that shakeout is not. Well, it's already at plus 15, so okay, you're already pushing your limit right there. It's not going to reach the same high levels, and so you're going to have a divergence between that setup. And so as soon as I get a lower shakeout, I'm going to be like, okay, people, time to short Facebook, and they're going to be like, you don't understand, it's going to 36, and I'm going to be like, okay, it might go to 36, but when we get our signal to short it, it's going to likely to retrace to what we're looking for before that happens. Um, Amazon, kind of an interesting one. Right back here, we had the yellow below, but it was off this reset in our shakeout. We had dipped below. We had the positives right here. Met those targets. What was that high up target here? 255. 40. So I mean, it cleared that on the gap up easily. Hadn't got. This is right about there, and then boom, just exploded. Now you got a gray dot. Positive extreme today. Again, I'll be looking for the first lower positive extreme, and unfortunately, I will be looking to most likely short that setup, looking for a retrace at least to this low, and more if there's a red dot. But I'm not going to jump into it before I have what, a lower shakeout reading time. And when we see some kind of transition to the power mode right now, you get a huge spike. Now, what I'm going to be looking for will be this ratio to drop off, like it did back over here before it then flips. Questions. How do you turn off some things? Iron Hawk in that. I would have to go look in that because I think in the inputs I may have a text option, and that's in the strategies. So that's a little bit more advanced with that. And in fact, if we wanted to show Iron Hawk and those kind of setups, then we get into my more complex charts. This one happens to be running the current setups. Now, if you have a actual strategy put on, these words are always going to stay there because those are the actual trades that are taking place. So you wouldn't be able to remove that without just removing the strategy itself. So that would be the way to do that as far as just removing, just, and actually to get rid of a strategy is pretty straightforward because you can go to strategies, I can click it, it will turn it on, and you just unclick it and it'll turn it off. So gives you lots of different features. Let's look at some other daily charts real quick while we're here. The PCLN, why not look at that? Because we know that there's still an overall daily short in there, but again, we kept waiting for what? Power mode to start evening out. Well, now look at today. Okay, we've finally reached a relationship here where you've almost got your yellow above. You've gone from strong bullish setups to a little bit weaker, and now the weakest it's been. Let's see what our shakeout readings are. We had a 9, now 962, still rising, but the rate of ascent has declined. This is where we begin to get our opportunities to jump into some of those short setups. because it gives you time, because these people take a little while to get out of their positions and also to begin setting up for their shorts. It just doesn't happen overnight. And I know my good friend in MA has been panicked about that. And then there were a lot of folks who wanted to jump the shark just a little bit in getting into the cat setup, because again, cat setup, same situation. While we expect a positive resolution because of where our yellow line is, we were also expecting to look for higher close on the lower extreme. We ended up with the gray dot in that. And so now, even at this close, that looked attractive. So nothing wrong with that setup there. And it was particularly attractive on Friday when you closed higher on lower shakeout. Now we have a rising shakeout. We still don't have a decline in the power mo, but that doesn't mean that that's still not likely to at least retrace back down to that 92.89. It just may take a couple of days, and sometimes you just have to wait. Particularly shorting. Shorting's a little bit tougher because, like I said, we moved from red trend to green trend. 1, 2, 3, 4, 5. So now this is our fifth bar finally from the red to green trend. So now your exuberance has pretty much faded. And coincidentally, it ties into a point where the markets are showing a little bit of weakness within their setup. And so people are going to say, hey, if the market's going to show any more expressed weakness, I'm going to take some profits. And that's usually how you end up getting these kind of dips. I don't need to wear my headset there because we're not using that mic anymore. Alright, well, it's Caterpillar. And again, still, let's look at the ratio here. It was about 3 points on the power mo that day, 3.5, then down to 2.5. Today, it's less than 1.8, something like that. So, it's moving in the right direction as far as the ratio of the differential to these two readings, and that's what you begin to look for. And, I've had some people ask me, it's like, okay, what do you do to look for to try and create setups overall that will, teach someone how to, create indicators like this, or even be in the same approach with it. And, it's like I try to explain to people, when you look at the market, and a lot of people will look at their various indicators, and when you're looking at those indicators, you're equating the same reading in different time frames and expecting them to represent the same thing. And what I've found in doing my research is that the market becomes segmented, and if you're able to identify the segments of the market and then compare the readings at those exact same segments, and this is where we get into some of the algorithm with the subsets and that, being able to identify repetitive patterns that take place both from a daily intraday, it can become a little bit clearer. I wanted to look at Google. I thought I had Google on here. Maybe not. Oh, there's my Google. Well, let's look at Google. How is Google doing today? Everyone loves Google right now, except for my red dot short, which suggested shorting right there, and then the gray dot, which suggested shorting, and lo and behold, it hit the target. And how nice was that? For a nice few bucks there. Love it when that happens. And it's just that clean. But again, look at the histogram compared to over here. Oof, that's ugly. So that may actually further resolve to the downside. Let's check a 78-minute of Google. See if we have any clarification. No, not really. Actually got a green dot buy setup within that one. So it could just be momentarily doing a little retrace. We had this red dot set up right here for a short. So, a little bit of a conflict. Never hit the stop on it. So you're still within a short, then within a long, and we know what happens when you get into these conflicts. And I think I had someone comment on that, because we had it with even Apple was showing both a long and a short setup. And it's like, well, you can step aside from those situations, or you can go with the overall trend of it. In this particular case, Google being green, would I look to ease out of a short setup that I had put in? from buying the short discount up here, or even from the gray dot. Yeah, I'd look to take any gains on that, particularly if I get a signal here. So any decline, I'd be looking, but then I want to look at a daily of Google before I just arbitrarily jump that chart, because this is why we talk about the dailies in advance. Oh, good is not going to get me anything. Is there such a symbol? Oh, there is. Well, there's good. That's a nice chart from red to green trend off that orange dot. Wasn't even trying to show that, and we can see that it doesn't matter what the stock is, we're still going to get signals because the computer can see the patterns. Alright, so here's Google Daily. Very attractive chart. We did end up with a positive extreme on Friday, so what is our expectation there? The potential for a retrace to 727. Alright, nothing bad about that. Again, all these power momentums were just showing you how much money was flowing into the market. Very nice, very strong, but beginning to taper. Alright, and it's beginning to taper. Now, you got to say to yourself, why is it beginning to taper when everyone has such a positive view of the market? That sounds kind of crazy. But that's exactly how these guys sell into strength. And you have to. But I would like everybody, because we want to increase the number of viewers on our channel, to give people a broader, view, go on to StockTwits at least on your account and just link us so that, people have an idea of what's available out there. So if everyone takes a moment and just tweets a little bit of thing on StockTwits for everyone to come join us on the live feed, we can get more questions. We can get, a little bit more detailed for everyone so that they have a different approach, just trying to open minds and not telling anyone that what they're doing is wrong. I'm just describing that there's a different approach and that sometimes it's a little quicker, and sometimes, it might give you a little better entry. Sometimes we're all in alignment, and sometimes everybody's in disagreement. That was Caterpillar. What other requests? Let me go back up through the thread here. I know some people put some there. We're going to look at the Amazon Daily. Did we look at that Amazon Daily? Here was the MA Daily that we were showing intraday from. Oh, and I think I put that MA intraday. Where is that? Oh, I switched it. Let's go to an MA then for the intraday, because we were showing that it had a short, and I'm not sure if it met that short. The MA short setup was looking for a retrace to 515.99. What was the low right here? 516.15. So it's about $1 away from its overall low. Typically what you're looking for when you're watching that power momentum, let me go back to it real quick. Now let me just disable these. It makes it just cleaner to look at. Alright, so what we're looking at is when we see the yellow above, it indicates that shorts have really overtaken your bull setup. And sometimes you get these anomaly setups where you get an extreme blowout and no price movement. This means that, in this particular case, you'd be looking for a decent move to the low side. From here, but you're looking for this histogram to build, but when it gets to a certain point, you're going to be watching for a top off, and the easy way to do that is we look for the relationship between how much higher the bull side is to the bear side. And in this particular case, started rolling off right about there. We had no real short signals from MA here. What we would want to see then would be our extreme histogram, because that overprice would pretty much tell us that we're overdone. Yeah, see, positive extreme ended up here. From red trend, we'd usually want to wait at least our 5 bars. So 1, 2, 3, 4, 5. Okay, then you ended up with positive extreme, rising. Can't do anything there. This was your first entry lower because it was a lower positive extreme. And your ratio had moved to its lowest point. Now, is it still possible that you could have had upside to this one? Yeah. But is it still correct to short at that particular point? Absolutely. So you understand that within doing it, you may still be not quite at the exact peak, but you know you're pretty darn close to it. And your expectation is just to start retracing these additional positive extremes. So in this case, 508, then you would be looking for an overall around 510 right down there. But oftentimes, after you've switched from a red trend to green trend, you want to expect in a 78 minute, I usually look for about 4 days. And that's same consistency with what you look at a daily standpoint. And so MA is reaching about that limitation. And then I was pointing out too a lot, because there was a lot of concern that it was going to gap up from what they'd seen overnight. And I'm like, that's fine, but think about it from a practical standpoint. If you're in a large position to the long side and you need to move short to the setup and you want to get out, you want the best price you can get. So you want to pump it as much as you can. And what's the best time to do that? In after hours. I mean, if there were this huge demand to it, why wouldn't it have gone up right before the close? Well, it's a lot easier to do that here. And then when you start selling into it, you have a little bit more leeway to get out of your overall position. Particularly depends on how much of the daily float your position is and how much you would need to unload. So that's why people see spikes, typically right before. And it's a great opportunity because you get short covering, that adds liquidity. Then you get the other guys who want to buy breakouts of highs. There's always that group that buys the breakout of highs, and those usually retrace anyway. That one always cracks me up. So that's what it's doing from that setup. Well, let's look at that Apple Daily and see what that shakeout was. I didn't really pay much attention to what the shakeout reading on Apple was from a daily standpoint. That's a good point. No, Apple's still fine. It's only minus 10 on the shakeout. Again, the key I was looking for Apple here, and this is what we were talking about from a broader perspective. Okay, we knew there's a good potential that we're going to retrace this low after a pop. Okay, and that's because we dipped below the red line on the extreme histogram here. Let me get rid of this average true range so that we're not clouding our picture. And fine, we understand that that's likely. We knew we got overbought when we hit right here. It happens. Nothing we can do about it. So as we started retracing, Friday came along and it's like, okay, the setup is starting to look good. We expect it to turn around to the upside, but you know what? They love to come down and retrace these lows, and they're going to do it on a higher shakeout reading, and it's going to be also probably on a higher extreme histogram. When that happens, is Apple going to become a huge buy? Yeah. Is it interesting that it's going to correspond pretty darn close to his earnings comes around? Yeah, because they're building up those who think that the short side is super strong, and we don't see any new fractal buyer setups, so they're just letting it fall under its own weight. Are we seeing accumulation? Not really, because the power momentum is not showing that the buyers are attracted at this particular level yet. All right, so that's just what it's showing clearly. After 2 days, though, I usually look for the potential of a nice bounce. Now, the fact, like I said, if we stay with this extreme histogram and end up with a higher close, I think that that's a huge positive and definitely worth this week's calls as opposed to playing it for a longer, buy setup. I mean, you can be aggressive at that particular point because that's the expectation, and is it a spread situation? No, I would not be looking at a put play in there. Just because when you look at this shakeout here, you do not have the selling you had right here. I mean, the improvement is dramatic. So it was a significant jump back in by the big players. Let's look at some that we haven't talked about in a while. I'm always interested. I don't get that many requests for the actual market. Most people want all the high flying, but when it comes to like SPY and that, which one of my favorites to trade, the overall markets, don't get a whole lot of excitement about it. But gray dots start the day, and it's retraced that. On that flip, we were looking for at least 145.59. Took that out from the 92. So easy 40 cents there from an overall market standpoint. You gotta like those setups, at least I think. Let's see Goldman Sachs from a daily standpoint. I know I went over a few of these. Likewise situation on Friday, put in the gray dot short. So not a surprise there. and long way still for it to retrace down. Still has to 130. So, um, which technical would carry the most weight? Um, that's a good question. I've never really kind of weighted them in that sense. We usually look for a confluence amongst all the indicators. I typically look to the extreme histogram first, um, and I break it down into these components. And this is why I typically show on my chart, though most people don't know what they're looking at when they're seeing it. I'll have these three displayed because I look at these in a tandem sense with my shakeout. I want to know, am I overbought, oversold within a specific period? So, okay, when I'm looking at GS, I can see that I'm near overbought from a broader perspective. So all right, I have that view. For my expanded ratio histogram, I'm looking for my very specific setups, either my ratio size or, and this goes into a different issue about is there a reverse to the ratio sign? For those who don't know what that is a setup from a daily that usually calls for short of significant proportions, but usually you want to see the yellow above the orange, and in this particular case it's bullish because it was off a green dot with the orange above the yellow, and so then it comes down and then we get the inverse relationship to it right here. But you're getting that inverse relationship to a rising shakeout, which means, okay, there's still more momentum, and you still have positive readings from your power momentum. So the power momentum at times is going to be a little late, so I'm really watching the relationship between it as not necessarily the most powerful. I'm going to get an earlier signal from my expanded ratio histogram and from the extreme histogram, and then when those are combined, which is what you're seeing from your dots, where they take it into account, it's like, okay, the red dot shows up because it knows that this is going to resolve to the downside. Well, in seeing it visually, I'm like, okay, but I don't have a lower shakeout, nor do I have my yellow line above the red. This becomes more attractive when, and I'll enlarge it here, when this yellow line passes over my red line here, and then I get my first dip of the white histogram below the yellow, then I have really a strong signal for my short setup. So I think it's becoming very attractive. In fact, GS here is going to put in a lower positive extreme, and without some market assistance, you're going to have a little trouble for GS to hold up within this pressure. And that's just consistent with what we're seeing with the market. And oftentimes you'll get that red dot a little early, particularly coming off of a strong momentum move. And I thought about not having it set up, but I think it's a good warning sign, so I like to leave it where it is because in some cases your short begins immediately. But with the overall market, and this is why you always see me do the overall market first and then move to the stocks, because you want to see, is the market behind your move? Are you fighting the move? It also gives you an idea. I mean, when you're expecting an up move within a down market setup, your expectations for a higher move are a little bit more muted, or at least they should be. Because sometimes if you get everything going in the right direction, you get a strong move. I mean, you get a huge exponential move beyond even what your targets are. I love days like those. Alright, so here's when we ended up with those bifractal setups from a daily standpoint, but we see that it moved to positive extreme, but again, from red trend to green trend. 1, 2, 3. This is day 4. Okay, so now this is when you would expect they've started to liquidate into this overall setup, and you're at least looking for a retrace down to that 118 level from where we're at. The target right here for this catfish setup from 118 was 121.50. Alright, met that target, so fine, perfect. It did that on Friday actually, and shakeout now is above this yellow line, which I call the warning line, and this is your scary line up here at plus 25 on a daily from those setups, not anywhere near there, but you look at the ratio. Alright, so on Friday the ratio between the yellow and the cyan line in this particular case was 1.4. So right there is 1.4. What is it today? Alright, you're looking at 0.3. So you see how all of a sudden, boom, your bulls ran from this setup just from Friday to just to today. So, say just today too many times fast. Blah, blah, blah. You sound like a drunk. All right, let's look at Baidu. I haven't looked at Baidu in a while. I'm doing the intraday, so it's going to do that little spinny thing. And well, let's change. Let's go to the daily first before we look at. And I wanted to look at FAS too because. All right, Baidu from a daily standpoint. Let's enlarge this. There we go. Look how beautiful that gray dot on actually a higher extreme. Interesting. So Friday, excellent opportunity to short into that setup. It did retrace the low overall, but you got your first dip, so we could see a little bit more of a retrace. Now, it's going to be interesting. Let me get rid of these lines here, because you're getting close to a bullish setup where we dip below this negative 45 in green trend. Can't tell which one's ahead right here. It's almost a virtual tie between whether the orange is going to be ahead or the yellow on this ratio size setup. So that's going to be important. Now we can see that we get a little bit of a glimpse that you can see the ratio declined dramatically here from Thursday, where it was 2.25. Then on Friday it dropped down to half, and then today you can see that shorts have really got the edge of it already. Amazon, yeah, we went over it, but we can go over it again. And let's look at the intraday for this setup. Alright, well, give a buy within that. And so this one's always interesting because, I'll get daily shorts all the time that end up either in green trend or whatever. They'll have a buy signal, where you're looking for an upside target. So it becomes a little bit of a challenge in that. But, you see this buy signal very ugly on the power momentum, very ugly from a shakeout standpoint. Not the best long setup in the world. This is one of those where if I do get ahead on it, I set a quick stop. It just is where you have to play those. But that's if you've got all the indicators. You're not going to have that if you're just getting your simpler dot alerts. And there's just, those are the drawbacks, limitations to not being able to have, And I understand people are recalcitrant about wanting to change platforms in that setup. That's fine. Just trying to make available to everyone, different levels of information. Alright, so back to the buy setup. We had a beautiful buy setup here off the orange dot. We wanted to see a nice discount from an Apple 10-minute. Gave the buy right here. I think it's about to hit target pretty shortly. There was your buy setup overall. Target is 125 roughly, just under. 124.95 was that? 94? So you got that one right there. Let me get rid of all these charts now. We'll go back to our intraday. Oh, there was a 15-minute Apple. That actually showed nice setup. Okay, so we've cleared it. So there was the Amazon Daily. Huge positive extreme. Huge buy setup overall. Let's look at a intraday of Amazon. Let's scroll up here. Amazon. We go. What do we want to look at? The 15-minute? Sure. So we just click Amazon 15-minute, and it goes there. So people asked, what's the easiest way to configure your radar screen? You can just, in this particular case, I can go in there. I can insert a blank row. I can type in the symbol name. I can right-click over it and just format Amazon itself. I can pick the time frame, daily, weekly, monthly, what it's going to be. If I then want to configure my alerts, I can go to whatever alert I insert. An easy way to do that is to, you can format analysis techniques. I don't even think we have one on here. Oh, yeah. Here we go. So this is what comes up in there, and then I can go through each of the different ones. You can move them over, readjust how it looks. I mean, it's completely adjustable as far as that goes. And then you just, though I do tell people you got to be careful when you're using my indicators with the alerts, you want to make sure that you right click up at the top of whatever you've inserted and add an extra 120 bars to the overall setup, because these indicators need that expanse of time to make the calculations. Alright, so we're looking at 10-minute Amazon. Ooh, buy signal. Buy! Buy! Just like Zipplane. Good old Fantasy Island, for those old enough to remember that. 267 is the upside target from the Catfish and the Extreme Fractal. So, not a whole lot of range there, but that's from a 10-minute standpoint. Let's see if it's confirmed on a 15-minute. This is why I like 15-minute, 10-minute combo, because you can get sometimes an extended target beyond what you were originally hoping for. And we have to wait for it. Anyone want any obscure stocks? Oh, I was going to do FAS. I wanted to do FAS because I wanted to look at it myself. Let me do FAS after we get this Amazon 50. Okay, see, confirmed. Okay, and it's going to be a bigger target. 267.80. See, it becomes more attractive. So, limiting yourself to just 10 minutes, sometimes you're going to miss some extra profit within an overall setup. Now, look at that retrace of the shakeout. Now, what's going to happen here? If Amazon reaches this 15-minute target, are we likely to see the same shakeout reading for matching highs? No. So that's going to be a trouble spot. Oh, GLD, no, absolutely. You know, an SLV we should look at, because that's one of our ones that we've put into the mix. GDX, we can do those. Let's do GDX. Well, we'll start with the real thing. Let's just do gold first. We can do it in order. Alright. Oh, You know, this is funny because I accidentally gave out the password when I was responding to someone on a direct message. And, it was okay because my wife gave me the little thump on the forehead, like, what were you thinking? I'm like, I was just responding from my phone. I thought that responding to a direct message would be private. And she's like, you understand that went on the whole thread? And I'm like, no, I did not. Oh, well. I'm like, what a nice New Year's gift for people that paid attention. They got an opportunity to listen to, the most recent report and see where we're at. It happens. Alright, so that's a halibut. Interesting spot for halibut. I know. We'd had some serious negativity within here, gold, but I was mentioning to members that gold was going to set up down here matching the lows on a much higher extreme histogram. And let me shrink this all so that you can get a real good perspective of this, because it was looking very attractive as we were coming down to this setup right here. Alright, so matching lows. Perfect. Much higher extreme histogram. Alright, now you get your bifractal. That one's setting up for a target up by 161. Perfect. We can see that from the expanded ratio histogram, we expected this to resolve to the upside. However, still no change in the downtrend, because we can't get this frickin' orange above my blue, which takes care of your downtrend. Shakeout, much better than the previous dip. So single improvement there, and I would expect that improvement to start, because notice the ratio of your shorts here from your power mode is just about to flip. So yeah, from a daily standpoint, that's looking good. Let's go ahead and take a look at a weekly real fast. What the heck? We're here. Oh yeah. Now, this is going to take a lot longer for a weekly to resolve, potentially, but you know what? You can see a target hit within a week, on some of these weekly setups. So not impossible, but you can see the drawdown right up here when everyone was really, enthused about gold. We could see from a weekly standpoint, ugly is that setup, and that people were distributing heavy into the rise, and it didn't take long for that cascade to begin lower. Then we reached an extreme down here, and it's kind of held flat. We've had some more buying back inside of it. They've tried to disguise it, which is what they do, and as they disguise it in gold, Most people are not going to be expecting. And this was the same thing that I've been saying about, commodities, even materials. It was just last week everyone was saying, oh, CNBC came out against material stocks and everything. And I was laughing because, we'd been extremely bullish on material stocks back when they were like, dead to the world. And that's just because they couldn't see where the money was shifting to. And that's fine. It just makes better trades for us. I can't complain about that overall. So, alright, let's go back to our daily. We wanted to look then at GDX. So, got buy signals from weekly on gold. You got buy signal. Now, is that a positive to the market? I don't know. That's an interesting one. GDX. Alright, GDX. Well, this is a daily one here. Look at that. Positive extreme trend change green 1 day only. Nice buy setup from the orange dot extreme fractal right back here. So that was at 45, gave a 46, 40 target. Hit that on the gap up right as it peaked, and this is where people say to me, can't I just stay with it? It's like, you got to take some at your target, okay? I recommend more than 60% taken at the target with these setups unless you've got a clear trend read that has changed, and from that standpoint we turn to my ABM, because my ABM will reset at those particular points and then follow a stop going higher. But you've got to have your stop in at your target point, because they will unload at that particular spot unless you've got some huge amount of new buying going into the setup. In this case, pretty weak from a GDX standpoint, though even from here you expected it to resolve to the upside. I will tell you though that the downtrend at least had ended from a GDX standpoint. So you want to know if the weekly call on GLD is valid? Of course it's valid. What was wrong with it? Did you see something you didn't like in the GLD that I went over? Let me go back to it, because maybe I missed something that you guys picked up. I'd love to have the students pick up things that I may have glossed over. Let's go back to that weekly. Dun, 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 dun. Okay, buy set up there. Higher extreme matching lows. That all looks beautiful. Orange below the yellow on the dip below. That's beautiful. Rising shakeout. Beautiful. Little bit of minor weakness here on your power mo. Yeah. Which is not surprising because price is still a little bit lower. But yeah, there's nothing about that weekly chart I don't like about gold. Glad we went back over that. But I get so used to it because I just immediately pick up on these things as I'm looking at them, and I don't even think about it. So it's always important for you to slow me down so that I'm actually getting the point across and that it's understandable. So thank you for that question. But yeah, liked it. Still like it. So that's all good from a gold standpoint. Let's look at Netflix while we're here, if you don't mind. Oh, and I wanted to do FAS. Oh, SLV, you want to do SLV real quick? Let's do that first while we're in metals. It's also a dot alert. Yeah, you got a problem when you get a short signal on SLV in a red. I mean, look at this red trend. Shrink that down. Deep red trend. And you get a short signal when you're almost at your lows. Okay, that's not fun. But it happens, and I hate it when people say, oh, I'm in, back up there at 30 something, and it's like I wanted to go back up and we're testing the lows, and I'm like, I got a gray dot, sorry, not improving. Which is interesting because look at that shakeout. So the gray dot did resolve, so that's already done. So we don't have to look at that as a short setup. Overbought, reached right here, based on the extreme, taken care of. We're midway down here, not a problem. Orange was below, so that suggests that we should have resolved to an upside. The problem that we're just going to see is a minor move up for our shakeout. This is actually looking bullish too. So this is within a day or two of preparing for a turnaround. You can see the ratio of the power momentum also turning. So yeah, it's ripe for the turnaround. So don't be discouraged on that one. And you've matched your lows, much higher extreme. You've retested for your dip below the red line. That's all fine. Oh, you typed in SLV and you wanted LVS? That's interesting dyslexia. We'll look at LVS in a sec because we just did wind too. But SLV I thought was appropriate since we were talking about metals. So there's potential for that nice pop there. And minus 12 point is right on the threshold. I would look for that to happen fairly quickly, otherwise your shakeout's going to get ugly fast. So I would expect to see that turnaround. NUGT. Never heard of that one, so let me go ahead and put that one. Well, maybe I've heard of it, just didn't know the symbol. NUGT. Oh, it's a directional. Okay. Of what? Gold miners. Okay, 3 times. I didn't even know such ETF existed. I should play this one more often. Thanks for the heads up on it. The price tag I don't like. I wish it would be a little bit better than that. That's where sometimes these ETFs. That's where I was loving the FAS when it was down in the 40s and actually even less than that. And then they tried to rebalance it, but you could really abuse it when it was at those lower levels. I mean, it was fun to just assault it. All right, so yeah, again, when you're looking at these directionals, I always tell you the first thing you want to look at is the primary, and that's where I would be looking at a GDX in that first. You want to look at the weekly on it? Let's look at the weekly. Yeah, but see, that's consistent with what you're seeing from gold in that, so that doesn't surprise you when you look at that, because the miners are going to go up with the gold. This is the same thing we're seeing with the GDX. So, but again, I still recommend that you look at your primary index when you're thinking about a multi ETF of any kind. Even when we do our SSO, my primary look is at the SPY, even though the SSO is a 2 times, because you always want to look at the primary index so that you're not looking at any distorted, because sometimes with the rebalancing with these ETFs, it can throw off, usually not a whole lot. It doesn't really affect my stuff as much as it certainly can tweak regular indicators. But still, I always, just from a practical standpoint, you want to be looking at the primary index. And what's this about cat? Let's go look at cat real fast while we're here. Dun 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 dun. Oh no, cat just went red. What's back to even here? So okay. That's from a weekly standpoint though. We want to go to a daily chart. Yeah, no surprise there. I mean, it's gonna drive you nuts looking at it when it's like every minute. If you're looking at a daily setup and that you're staring at a chart intraday, you're going to freak yourself out. Don't do it. If you're trading intraday, fine, stare in front of the machine. If you are not trading intraday, do not stare at the machine. It will kill you. Yeah, FAS, we'd seen some negativity from the overall setup. It had the nice punch, but now we're at the plus 22, still had some decent inflows, so I guess we can look at the overall regular index, but I suspect that I'm going to see the same thing that we're seeing from the general market, just a fractional weakness. Nothing to have our freak up about. Apple got so close to the target. 524, what did the high there? 524.70. What do we need? 524.94. Okay, 20 cents. Give me a break. Come on. Get your butt up there. You think that'll help? Okay, let's scroll back down through our list. Nobody likes V. I've yet to find anyone who wants V. I'm thinking of just eliminating it out of our dot alert setup and seeing if there's something else that people want, because I'd rather give you what you want. It's had some good signals. Alright, V from a 10-minute. Still hasn't reached any of those targets. And it's just kind of slow. That chart's too wide. Let's shrink that down. There we go. That's a multi-day setup. Look at that. See, that's the thing. It goes in these nice swings, so it's not as like jumpy. If we attach my ABM, this is the kind of stocks that I like with using my ABM, because you get that nice ride, and then boom, you'll dip below, you get you out, then you wait for the reset. Yeah, looks decent. It's gonna have some trouble though with the upside. Interesting that you would have the huge move in MasterCard and this somewhat weak Visa setup. That's kind of odd, but odd can happen. Everyone's got their own different, and this is one of those things where it gets into fundamentals and stuff like that. Um, the market itself is going to set a general price. These guys that are trading these fractal setups, they're just going to take whatever that price is and move a range within there based on how much liquidity they're facing and how they can push price around. That's all they're looking for. They don't really care about whether earnings are coming up. They don't care about whether or not it's a build up towards something. That's just all they're looking for. So and that's why I don't get in debates with the fundamental guys or anything like that, because I'm not looking at earnings. I'm not looking at anything. I'm just looking at what these fractal buy guys want to do, and within the setup that they're doing it, I want to make my trades. And more often than not, they get it right. And who doesn't want to be on that side? Well, let's show you what we were looking at from our material standpoint. Beautiful. Power momentum on WLT. Rising shakeout. We had a little bit of a hiccup, but you're getting near pretty extreme on that overall setup. But it is convergent in that you're getting higher readings with that setup. And you got the orange back. You had the yellow down below. Here's kind of what we're seeing from the market. The exuberance of the superpower pushed us up through here. And now a little bit of an explosion even from that overall setup. And this was the concern that you could face with the market, except for the fact we finally saw that change in the INX where shorts were ahead, so I wasn't worried about a huge breakout to the upside of the market in this particular case. But even if we had the positive extremes, particularly on the market coming from red trend to green trend, would not have been surprised to see this kind of a setup develop, but it just didn't show. Materials, it's just this is where people are going to have to go when they're looking at the deficit, and that is what I've been telling people for the last 3 months. You're going to have to escape into some of these materials, because it's going to be your only hedge against the natural inflation that's being brought upon by the huge deficit spending. And you can't always go to precious metals because they're going to be under pressure at times, depending on market drops. If there's a huge liquidity fade in the market, and a lot of people are invested quite a bit. I mean, they've all jumped in hard for this S&P move, and I think most of them a bit late. My opinion on that one, not what we're seeing from the indicators, just that we are seeing the potential for a small retrace at this particular point, but that can grow. So with that said, WLT, nice looking. Can't complain about it. No objection. I'm going to do eBay real quick, and then we'll take a break for a while. Oh, you know what I should do? Put my little ticker running. Play with my little setup there. Okay, eBay, from a daily standpoint, positive extreme right there. Was looking for a retrace. Did it get there today? 52.04, 52.06 within 2 pennies of it. So you can see that they targeted that. As soon as they got near it, they started buying it. Good setup from that one overall. Not bad. Let's run through before I close out a lot of little intraday setups. Alright, there's your PCLN 15-minute. The short setup still looking for a retrace to the low right down here on PCLN. That would be a pretty significant decline though, actually. 644. Google 15-minute, just put in a buy setup overall from that one. Upside target 737. Those wanting to pay attention to that. Overall has a buy signal from a 78-minute chart. A little bit contrary to the overall market. Apple from its 15-minute standpoint. I know we were looking at that Apple from a 10-minute. Let me go ahead and there's Amazon 15-minute. Scroll again, Apple 10-minute, and see if we have that similar signal. Sure, I'll put up LVS in just a second. Right before we do the break. Alright, so there was the 10-minute for Apple. It was seeking 524.94. We got 524.70, and it's still just like, holding right there. Can't seem to get past it. And from the Apple 78-minute, what's that up to target? 529.83. So there you have those. Let's just put in any chart here. Here's Google's daily. Let's put on LVS. Oh my goodness, don't you love that? Alright, so rising positive extremes with that today is, though, the point where it's time to think about the fat lady singing, or at least prepare for a pretty significant pullback. All the way down to 47.99 will be the primary, but I take it one step at a time. Alright, your first low to retest is 49.56. Get there, you'll reevaluate. You can clearly see that we're making a lower shakeout reading setup at this particular point. The key for it, though, as we crossed the yellow above the red here, which gives you a clear idea. You wanted to see the up, down. Oh, you know, let me do it real quick right before we go anywhere. Let's just put up a Google daily. It's a good question. Linda is asking about, yeah, with the Brad Pitt. She was asking about, we had put up up-down power. And let me go ahead and put it in here. Let me see if it's on this one. I may not have it on this chart. Figures I would not. I need to have a chart that has it. Oh my goodness, I know I put it on some charts Friday. Where are all those? Alright, instead of hunting it down, let's just go ahead and create it. Alright, I'm going to put Google back up. It'll take us a second. Always good for people to see how to add in indicators. Get rid of some of these extra lines. Alright. So we're going to insert an analysis technique. In this particular case, it's an indicator. And we have to go to My Indicators, which are all the way up here. Up, down, power, continuous. No axis. We're going to put it all the way at the bottom. Our inputs are defaulted at 10.75. But for the style, we need to have it as a histogram. Okay. And then I just click my OK down at the bottom. And there's my up, down, power. Alright, so I'm going to disable these other ones because she just wants to see the differential in the inputs and how they affect. This is high speed. From a daily standpoint, I don't mind it. If this were an intraday chart, I want to go with a little bit different reading. But sometimes it's good to compare these. I don't want to format. I want to insert another exact same thing. So up, down, power. We're going to insert that one. This one we're going to put in subgraph. No axis first. Subgraph 15. Our style is going to be histogram. Histogram. Darken it up a little bit. And from our inputs, we're going to go 25, 19, And you want 7. Dun, 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 dun. And voila. Okay. So from a daily standpoint, you get a little bit broader approach, but what it's showing you up here is a little bit stronger case for the shorts, because let me grab my calculator. And what we do is we take the calculation, and in this particular case, we'll take this day right here. I zoom it up. The reading is 1750 for the red, and you divide it by the 3469, and you get some crazy number because I'm trying to do it one-handed instead of doing it with 2 hands. Let me just set it down. Okay, 1750 divided by 3469, 50%. So, that's actually not good for shorts because they can get squeezed pretty hard on it. But if we look at the bottom one and understand the relationship from a tighter standpoint in time, it's even lower for a reading. Because you'll notice it's 24 versus 7. So, I mean, just looking at that, you already know that you're far lower in your reading. So today's reading is 1791 divided by 3043. It's moved up to 58%. So that's a significant increase in the number of shorts adding into our setup so far today. From the faster time frame, not so much. 646 divided by the 1882 is still only about the 30-something%. So it just shows you that overall, as an aggregate, you're starting to see more shorts into the setup. From our shorter time frame, if I could start to see this one increase dramatically, then I would be getting far more concerned about a bigger drop in Google. The input from the setup, it's just giving us the number of bars that we want to look back for in this particular case in order to create the subset calculations. The fewer number that you look at gives you a different relationship. And so I use the 1075 as a default in there for very short time spans. You want to go, like if you're looking at a 10-minute chart, you definitely want to have the 2519. I'll even do the 2519 15 on this setup. And you can see a subtle difference there. It's not huge. It's just the way it factors. And it becomes a preference at that particular point. You can make your adjustment either direction, but what you're looking for still is that relationship. If you're looking at it from a daily standpoint, even looking at the 2 is not bad because it gives you an idea that very near term, shorts have just started to increase, but they've been doing it into all of these inclines a little bit more each time, and now you're starting to see a little bit fewer buyers. So the fewer buyers with the increased number of shorts, that's not a great sign for Google from a daily standpoint. And that's where we begin to then start saying, okay, let's look at some of the other ones. You bring in your up-down power, then you bring in, let's just do them. Shakeout indicator. Notice it's already higher highs, lower shakeout reading. This is the earliest signs of, the potential problems. Power momentum then gets added in. Okay, you're looking for a decline in that ratio. We already started to look at that and saw that that was developing, so that we knew that that ratio was getting closer together, which is also not a positive. And then, finally we look at our expanded ratio histogram, which suggests that we're going to resolve to the downside on this. Though the fact that you got the orange back above is a little bit more of a positive right now. You would need to see the yellow shoot past the orange right here to get you your final setup. And that would be interesting because if we move past the plus 13 and you get that yellow above there, then you would have a clear ratio histo psi signal, which would project a much longer decline in Google. As it is now, it doesn't really look for much more than, well, again, you start with the retrace of this low right here, 727, and this positive, well, this one wasn't a positive extreme. So your only real positive extreme setup is right here at the 727.68. Think I'm going to sneeze. Okay, that was a good sneeze. Alright, that's going to do it for right now. We'll go ahead and save this one, and if I get an opportunity, I've got a bunch of performance reports and things to print out, so I'm going to take care of some of that work, but hopefully this was a good opportunity to go over a little bit of what's going on generally, and yeah, thank you for that, Linda. And as always, though, keep looking for us, and please feel free to turn us on to some of your friends on StockTwits, wherever, and give them an opportunity to take a look at the setups and see if it's something that they might be interested in as well. As always, though, take care.